Hey, good morning everybody. Today is Friday, March 1st, 7:16 a.m. Eastern Time. Just let's review what I wrote, what dealer left in the book last night after the close for today and compare what we have in the pre-market. Okay, I have been now since yesterday constantly said that I don't like such environment, right? I want to highlight that because now I suggest caution. I'm not saying that top is in. I'm not saying that market will crash. I'm not. How can I say? Anyway, I'm not saying also that the training will stop. Okay, I'm not saying that the pattern is already changed for by the dip to sell the high, not something like that. Okay, but I suggest caution because you guys have been seeing that what they have been lefting at the book, is kind of reflecting during the intraday, but the direction have been changing during the intraday through gamma. What I'm saying, for example, on Tuesday, we expected a red day. Just fix the dates. I don't remember if it was Tuesday or Wednesday, but anyway, we expected a red day to backtest 5050 region, 5060, and close red. So what's happened? We backtest the minus GX that was located at 5060, the minus GX that they set up in the Friday before last week, but during the intraday they bring market back up, right? In another hand, because the structure that they left on Monday was totally bearish. Remember, regarding Wednesday. So what we saw Wednesday in the book? A very bullish structure, right? A very bullish structure with gave us how can I say, gave us a wrong analysis because per the structure that they left suggests us open with a gap up above 4095 and a possibility to backtest 4100. Remember? So what we saw was a big trap. We saw a gap down, back test 50,058 again, and they bring market back up, close around 5,068, 69. Remember? So they have been testing the minus GX twice, I mean 3 times this week. Yesterday also, 2 times this week. We also bought. I post you guys. Oh, guys, I'm opening like a bullish structure for Friday. So I open a bullish structure for Friday on Tuesday, and I open a bullish structure for Friday on Wednesday. Remember? So what they did yesterday, and also I highlighted in the market trap. Oh, should it be a big trap? Because last Friday the volatility skew. Remember the volatility skew? You guys remember Monday market trap, volatility skew. So the volatility skew suggesting also as a weakness Monday, Tuesday, and Wednesday, and a bounce on Thursday. Exactly, what we had in the book last week. You guys remember that, right? But what they left in the book yesterday was a totally bearish structure that didn't give us a clue about the direction. I mean, about, you know, the melt up, the squeeze. But last Friday, the volatility skill suggests us a bounce on Thursday. So what they left on Friday, last Friday, reflected so far this week. But during the intraday, at the close, they have been switching structure, right? Making us right a wrong market wrap. So what happened yesterday? We opened with a gap up that wasn't in the structure. So we back test 5,095, where I close the bullish structure that I opened for today. You guys follow me in the group, in the closed group. And then we back tested again the minus GX at 5060 something. Remember that last Friday they set up the minus GX at 5,060 and the bottom was respected perfectly. We touch in that region and we back up, right? So far we review everything that what they left last Friday and what is happening so far this week. Okay, so you guys just realize that Monday and Wednesday, you know, the market web, the levels was totally respected, but the direction not, because the influence of dealers during the intraday through options, not through futures, right? Especially yesterday, I put in the market web the orders that you saw, right? It started at 2 p.m. yesterday that they bring markets up. At 2 p.m., they start to neutralize delta. Look like that somebody was playing negative delta. And as soon Euro market start to back test 50,085, because, you know, at 2 p.m. we were trading below 5,080, and 5,080, 5,085 was like a no trend area, and as soon as you break 5,080, somebody starts to neutralize deltas. That was my interpretation. And at almost 3 p.m. somebody bought, you know, SPX cash at 50,082. And then they bring market above 5,100. And you saw a sell-off, bring market back below 5,100, right? So we monitor the book, we understand why we break it. I saw, you know, a lot of people just, you know, also in the open group said, oh, we're supposed to be test such level, and then I supposed to be see, you know, a downtrend. And the downtrend that you saw was just, you know, to clean it up the book, to make the implied volatility going back to the puts, consequently make Theta burn out the deltas. You guys have been seeing deltas being burned in a very small time frame. This is not bullish at all. This is not bullish at all. And as soon, you know, Theta burning out the deltas and took, you know, premium from calls to bring to the puts, you guys saw the markets back breaking 5,100, back test 5,105 and going back down. You guys also realized during the intraday, I did the same thing that this guy did. Because when we were trading at 59, when I closed the bullish structure, I opened a bearish structure through a vertical selling call spreads. Remember, I sold 50,080, I bought 50,085. And then, you know, as soon as I start to sold, you know, the spread, market went back to 5,060. And also, as soon came me back and break 5,085, I bought in the money call to neutralize my deltas. But I bought 3 times bigger than my bearish structure. Consequently, I was profitable. When market backtest 5,100, I closed my neutralized delta because the book didn't suggest us to go up to there. It was a pull squeeze, right? And I left, my bearish vertical over there to not pay, how can I say, fees to Fidelity, right? So I was profitable because I neutralized my delta is 3 times bigger than my structure. So you guys have been now understanding what is going on, right? So check it out. I like to show. So check it out, the DIX. I put very clear to you guys that I really don't like when you see the DIX is still printing 44%, especially in a green days that you see big spikes during the intraday, and the GX is going up. It's crazy. I don't like this environment. Why? Because higher GX means volatility is being suppressed. Means that we need a lot of money to move the market. So it's not easy to move the market at all. We need a lot of money. In this case, $6 billion. And in another hand, market is running without liquidity because the DX is printing around 44%. So market participants are not willing to buy anymore. What you guys have been doing with those squeeze, they are forcing people to buy higher from them. Means that we start to see a distribution. Risky assets is leaving the left range and going to the right range. Who is the right range? Could you be CTAs? Could you be regular retail? Yes, remember, CTAs are retail. The treasury department of the banks are the dealers because they are responsible to provide the liquidity. So as soon as you guys see the DX dropping, the DIX dropping, the GEX is going higher, it's because something is not running well. So I suggest you guys caution. I'm not bullish as before, but as I said at the beginning of this video, doesn't mean that the market will crash, doesn't mean that top is in, doesn't mean that the trend will be reverted. Because so far we have been seeing like bullish flow and so bullish delta flow during the intraday. It has been switching, flipping a lot. But so far, we are in a positive gamma territory. What the positive gamma territory means? Buy weakness, sell rallies. This is what is going on. Buy weakness, where they bought 50,060, because is where they set up the minus GX. And where they are selling, where they set up plus GX, 5,100. Okay? Of course, during the intraday, the plus GX have been changing. But as you guys been realized, as soon as you reach the intraday plus GX, you will see a drop. So far, this what's happened during this week. You guys understand that they start to make a distribution. They are not willing to buy anymore. Anyway, so what they left in the book, a bearish volatility skew again. So running out of the liquidity, higher GX, low liquidity, with books prepared for wherever they want. If they remember, I like to say, what means lower liquidity? The door is really closed. If they want to pump the market, the door is tight. So they force you to buy higher. Consequently, you guys have been seeing those gamma squeeze. If they wanna buy, they wanna cause panic. So they will force you to sell lower, because a lot of people will start to sell, but the door is really tight, lower liquidity. But we guys are not seeing that. You guys seeing that they wanna sell. If they wanna sell, lower liquidity, higher GX, small door, gamma squeeze, right? That's the setup. So what they left yesterday? Bullish delta flow, delta resistance at 5,100, and possibility to see a delta support at 5,009. If you compare with the gamma design, it's almost the same. 5,100 supposed to be the gamma resistance, and 5,009 supposed to be the gamma support. We could see a very tight market, a premium collection day to day, a small candle. This is what tends to be, right? A very tight market. So gamma and delta is reflecting almost the same support and resistance. It's telling us that, market tends to be sideways. Okay? Especially because the GX is at 6 billion. It's like a no volatility environment. Gotcha? If you check, the option book, you guys realize that 50,085 is a no gamma region. The higher opening interest is located at 5,150 regarding calls, and the lower and the higher puts open interest is located at 5,050. It's a big spread, 100 point spread, right? Why you seeing those spreads? Because the volatility skew is telling us that it's much more profitable to sell out of the money calls, because the implied volatility is lower compared with out of the money puts. I already explained this to you guys. So it's totally normal to sell out of the money calls to buy out of the money puts. That's much more profitable. This is what volatility skew is telling us. Consequently, we are seeing a 100 points spread between open interest. Because if the market crash, the guy tends to be paid off, right? Because the implied volatility is higher. This is what volatility skew is telling us. You guys understand, how you connect the piece of the puzzles? I hope so. Lower liquidity, higher GX, volatility skew form a bearish smirk, means that you could see a crash. Not telling that is going to happen. But do you guys understand, the puzzle, right? So that's a beautiful setup. If you want to play a casino, that's much more profitable, to play against the trend, because the trend is going up. So far it's going up. If I tell the trend is going down, I'm a crazy guy. It is not, We have been going up since we saw the bottom. Right? So, but the structure nowadays is telling us it's much more profitable you sell out of the money calls and buy out of the money puts, because something could be happen. Could, I'm not saying that will going to happen. Could. Consequently, you guys have been seeing this in the book, because that's the setup. Okay? So since you already reviewed the market wrap, and I also put in the summary, the structure keep print divergence. However, delta flow is bullish, but volatility skew is not. Leaders removing liquidity, everything that I already saw. So far we're looking for 4,009 is supposed to be the support, 4,100 is supposed to be the resistance. Weakness, remember, positive gamma, buy weakness, sell rallies. Weakness start at 5,075, so 5,075 tends to be the worst case scenario for today regarding the trend. If you break it down for 5,075, I don't disregard a visit at 5,060 and 5,065 again. Okay? I don't disregard that. So we already reviewed the market wrap. I give you a overview about the structure because that I'm not bullish anymore. I'm suggest cautions, okay? But now let's compare with what we have in the book right now, okay? Remember, weakness 75, 50, 5,090, support 5,100, resistance. Worst case scenario, if you break 50.75, so 50.75 tends to be viable. Worst case scenario, the region between 56 and 56.65. That's what they left in the book yesterday. Let's close and let's check right now. Let me bring the volatility skill back to the screen first. Volatility skill is still the same. It's a pre-market, so we will not see, too much variance in those in the volatility skew. That's totally normal. So the volatility skew is still the same. The volatility skew is also reflecting what delta is showing us and gamma is showing us. 50,009 supposed to be the support. Regarding over here 50,093 because it's where out of the money puts imply volatility start to spike. So we need to look for 5,009 as a support, and 5,100 is where out of the money calls lose volatility. The volatility, the implied volatility in puts is higher than the call. So 5,100 supposed to be the resistance. Breaking out of the money calls tend to spike, so we tend to be how can I say, to form a bullish smirk. Means that you will see a graphic like coming down over here and then jumping and then going like a flat. You'll be the opposite of like this. So the implied volatility is still showing in pre-market the same levels at delta and gamma left you guys yesterday. Okay, hope you guys understand, but bearish smirk, not bullish. So, regarding flow, it's a pre-market. Flow now became, the delta flow became like negative. It's bearish, but nothing that you want to be concerned. So, instead of 5,100, now let's use the inflection point for the upside, 5,110. And if you break up 5,100, we tend to backtest for 5,110, and 5,105 tend to be the support. 5,009 is still the support per delta. This is because where you start to see weakness. Buy weakness in a positive gamma, right? Buy weakness in a positive gamma. So far the support is still the same. But the resistance changed a little bit, moving from 4,100 to 4,110. So we could consider 4,110 as an inflection point for the upside. And if you break and backtest 4,110, 4,105 will become a support. Regarding the gamma, didn't change too much. 5,100 major. It's changing during the intraday. You see the graph is already updated, but let's use this. 5,009 support, big positive gamma. We are already at 5,095, and future suggestion only 2 points, 3 points gap down, so means 5,093. So 5,000. It's flat. It's changing. It's flipping a lot. But now we move to 5,095. See, it's moving the supports for 5,095. So, but let's use that region 5,095 as a support now back to 5,009. But the 5,100 drop a little bit, and then they move the higher level of gamma at 4,120. It's kind of a little bit different of the delta. See, it's divergence. It's diverse about the levels, and also the flow, because it starts to print negative delta flow. Okay, so skill still is the same. The level 5,009 is still the same, viable. Okay, if you see break 5,009, so 5,880 and 80 is supposed to be viable, if not 75. So remember that 5,080 was a no gamma region. that they set up, still like a no gamma region, is a start to be like a negative gamma, so weakness. Instead of 75, that was the weakness left yesterday, so now tend to be 5,080. So they jump, the weakness 5 points from 75 to 80, right? So 80 tend to be the buyable if you break 90. And the worst case scenario is still the same in the region at 65. Okay? Gotcha? So, just summarizing. 6 billion is needed to move 1% market. Market is running out of the liquidity. We tend to see a no volatility today. Book proposes a very tight market. Maybe we will see XPX trade between 5,009 and 5,100. We talk about 10 points spread, right? So, environment is not bullish at all. So, we have been seeing gamma squeezing during the intraday because dealers want to sell higher. They doesn't want to sell lower. Also, they doesn't want to buy lower. And also they doesn't want to sell lower. So they buy at the minus GX and they are selling at the plus GX. So today case, okay, the minus GX is located today intraday. The minus GX today intraday is located at 5,665. So I don't disregard the visit over there because this is supposed to be the worst case scenario. Same thing as reflecting as today. Just the upside is a little bit higher than yesterday. Okay, but the puzzle is still buy weakness, buy the negative jacks, sell the positive jacks. Now the positive jacks jump 4,120, but the general is 4,100. Okay, so don't disregard a very tight range today, 10 points range, maybe 5,009 up to 5,100. We could see spikes, above those levels, but the market tends to close between those levels. Small candle, because we are running out of the liquidity and we have a higher GX, volatility is being suppressed, and dealers are not willing to buy anymore. Dealers is willing to distribute, to sell higher. Guys, take care.